Hello, Ippolito here, and I want to go over why I'm bearish on banks and bullish on bonds. So I'm looking right here at the TLT. It's the Treasury 20-year bond ETF. You could also look at ZB, the 30-year bond futures. And we see TLT, this is 2 days in a row. Even though Friday we had the massive rally in the NASDAQ, TLT was up. And then today, TLT was up nearly 1%, trying to have a bullish candle here on the daily and cross over these moving averages here. We do have a bounce at support we've held before. Uh, this is the fourth time here. So what does a bounce in TLT mean? Well, let's look at the financials. In this instance, we'll use good old Citigroup, it looks like. So we have Citigroup here. Let's see if I can get it on the daily. That's a weird. There we go. So Citigroup here I have on the daily, and we have here in Citi. There we go. We had the earnings drop, even though a lot of the banks reported pretty good numbers. We had the rally here, which we did not cross the highs, and now we have a low volume here and just really not much going on. Chop price action, and that not only continues to Citigroup, as we had JP Morgan break that 100 and Bank of America nearly break 28 and coming off the lows, or we could look at the XLF or Goldman Sachs, which is really never got much going on for the banks. So everyone's bullish on the banks, thinking the Fed's going to raise rates, everything like that. My theory is when everyone's long the banks, it's usually a good time to either A, take money off the table, or B, take the counter trade. And what I mean by that, if you look at like something like AMD, everyone's long AMD, everyone's long semiconductors, and then we had that massive breakdown there in AMD. So just a little food for thought there. Money's flowing into technology out of the banks. We saw that with the earnings of Amazon, Google, Microsoft, and Intel. So I'm just warning, caution on XLF, the banks in general. I do not like them, and see what tech earnings brings for the future.